Hey guys, what's up? I'm Erin and welcome back to the channel. If you've been a disciplined saver and investor, you might be in the very fortunate position that you're not only secure in your financial future, but you're also in the position where you can help the next generation. Maybe that means helping your child buy their first home. Maybe it means covering the tuition for your grandchildren, or just giving them a head start with investing. It's one of the greatest rewards of financial success, the ability to give while you're here to see the impact. But gifting does come with its own set of IRS rules, exceptions, and a little bit of paperwork. So today we're going to break it all down so you completely understand. We'll look at how the annual and lifetime limits work in 2025, the special exceptions and when they kick in, what counts as a gift and what doesn't, and we'll walk through a real-world example. And stick around until the end because I'll go over some common questions that don't always get answered with the most clarity. So with that, let's dive in. In 2025, the annual gift tax exclusion is $19,000 per recipient. That means you can give up to $19,000 to as many people as you wish, whether that is children, grandchildren, friends, all without any reporting. And if you're married, you and your spouse can combine the exclusion. That means you can give $38,000 per person per year. This is called gift splitting. Here's the key. This is a per recipient rule. So if you have 3 children, you could give each of them $19,000 or $57,000. And if you're married, you and your spouse can double that amount. And all of this can be done without touching your lifetime exemption. And there's one more thing to hold on to. These numbers are indexed for inflation. So while they're $19,000 per person in 2025, they're going to increase over time. Now, what if you want to give more? Well, that's where the lifetime gift exemption comes in. In 2025, the exemption is $13.99 million per individual or $27.98 million per couple. Any amount you give in excess of the annual exemption just gets applied to the lifetime exemption. So importantly, you're never going to be paying tax unless you've used up your entire lifetime exemption. So that also means that 99.99% of people are never actually going to pay gift tax. The only consequence is filing IRS Form 709 to report the gift. You only owe gift tax if your lifetime gifts per person exceed these very high thresholds, at which point the IRS does levy a 40% gift tax. But the good news is not only are the annual limits adjusted for inflation, so too are the lifetime limits. Just a handful of years ago, they were around $11 million. Today, they sit around $14 million per person. And under the One Big Beautiful Bill, which was passed this year in 2025, the exemption will jump to $15 million per individual or $30 million per couple starting in January 1st, 2026. And those inflation adjustments will continue from there. And here's where people sometimes get confused. The annual exclusion and the lifetime exclusion aren't either or buckets. They work together, kind of in layers. Think of it like this. Every year, the first slice of your giving is covered by the annual exclusion, $19,000 per recipient or $38,000 if you're married and splitting gifts. That's the free pass. If you decide to give more than that, the extra doesn't trigger an immediate tax bill. It simply starts reducing your lifetime exemption, which is just under $14 million in 2025. So in practice, you can give both, your annual exclusion plus however much of that lifetime exemption you want to tap into. Let's put some numbers to it. Let's say you want to give your child $50,000. You can give $19,000 and that would apply towards your annual limit. The remaining $31,000 would apply to your lifetime gifting limit. The only consequence at this point would be filing that IRS form. There's no gift tax due. And there is an important nuance to point out here. The annual exclusion is sort of a use it or lose it feature. Let's say you didn't gift anything back in 2024. You can't retroactively try to apply a gift to 2024, and you can't preemptively try to give a gift for 2026, just being that it's year 2025. The only time the annual limit applies is for that specific year. You can't go forward or go backward trying to use different years' annual limits. So for most families, this means you can give very generously, whether that is wanting to help your child with a down payment on a home, to start a business, or even help to fund a wedding. The IRS just wants a system to track total lifetime gifts. They're not trying to discourage those gifts or punish it. Now, what counts as a gift? A gift is any transfer where you don't receive full value in return. Giving cash, that's a gift. Paying off your child's credit card, that's a gift. Buying a car, titling it in their name, that's a gift. Helping them with a down payment on a mortgage, but paying the mortgage lender directly, that's still a gift. So in other words, it doesn't matter if the money passes directly to your child through their hands or to a third party. If it benefits them, that's a gift. In some cases, it is just simpler and a smoother transaction to pay the lender, the title company, or the broker directly rather than giving the money to your child to give to this third party. But from the IRS perspective, it is still considered a gift. But of course, not everything counts as a gift. There are some really important exceptions you should know about. These are essentially carve-outs where the IRS says, no, that doesn't count as a gift. Number one is tuition. If you pay the tuition directly to the educational institution, it's unlimited and never treated as a gift. But note that this only applies to tuition. It doesn't include room and board, books, or other school fees. Medical expenses. If you pay the doctor, hospital, or even the insurance company directly for someone's medical care, that is not considered a gift. Gifts to your U.S. citizen spouse. You can give an unlimited amount to your spouse if they are a U.S. citizen. If they're not a U.S. citizen, there is an annual limit, and in 2025, that is $190,000 per year. Gifts to qualified charities. Donations to qualified charities are not treated as gifts for tax purposes and may even qualify you for a deduction. And finally, political contributions. Gifts to political organizations are not considered taxable gifts. All of these categories are unlimited and they do not affect your annual limit or your lifetime exclusion. So if you're a grandparent who wants to help your granddaughter with her tuition for college, simply write that check directly to the institution and it doesn't affect your gifting limits at all. Let's take the classic example. Mom wants to help out with a $100,000 down payment on her child's home. Here's exactly how that would play out. The first $19,000 is covered under the annual exclusion. The remaining $81,000 is over that limit, so it reduces her lifetime exemption. She'll need to file Form 709 to report it, but no taxes are owed unless she's already given away more than her $13.99 million for her lifetime. Now, if your mom is married and she and your dad want to split the gift, here's how it might work. Together, they can exclude $38,000 right away. That leaves $62,000 to apply against the lifetime exemption. And for reporting purposes, that $62,000 gets split between them. So $31,000 is applied against each spouse's lifetime exemption. One of the simplest ways to stretch your giving power is by using calendar timing to your advantage. Remember, the annual exclusion resets every January 1st, so you don't get to use a one-time annual exemption of $19,000. You get a fresh $19,000 or more because it's indexed for inflation every single year. So let's say you want to help your child with a big purchase like a down payment for a home, but you don't want to give all of this money at once. You could give $19,000 in December and then turn around and give another $19,000 in January, just a few weeks later. Now you've transferred $38,000 almost back to back, and you didn't even touch your lifetime exemption. And if you're married and using gift splitting, that number could jump to $76,000 over that same window. The point is, with a little creativity with your timing, you can maximize how much you pass along without ever touching your lifetime gift exemption. And this can make a big difference when it comes to helping with big purchases. At the end of the day, here's the key takeaway. For most families, it isn't about writing checks to the IRS. It's just about a little paperwork and planning. So unless you're the ultra wealthy, you're not going to be paying gift tax. The IRS rules were really designed to track large transfers against your lifetime exemption, not to penalize you for helping your kids or your grandkids. So don't let the words gift tax scare you. For practically everyone, it's just about knowing the rules and which form to file if you exceed the annual limit. And beyond that, just enjoy the position you're in being able to help others. So what are your thoughts on gifting? Leave them in a comment down below. I post new videos every single week. If you got anything at all out of this one, please give it a like. If you're new here, please consider subscribing. Or if you know of someone who might get something out of this type of content, please consider sharing. I'll see you soon. Bye.